One of the things that the American people are concerned about is that, one, you've grown your balance sheet to over $2 trillion, and that ultimately they're on the hook for the activities of the Federal Reserve. The other piece is the Treasury recently has made a recommendation that now we make take additional responsibilities, additional authority, very even more broad authority maybe than some of what authority you already have, to be the systemic risk regulator. And yet we have the Fed coming to us and saying, yes, you know, we aren't going to have full disclosure. We're going to take on these responsibilities. And I think they're concerned about that. I mean, I think about, for example, the currency swaps and international currency transactions that the Fed is engaged in. And we don't know all of the details of those transactions. And are we requiring these countries actually to turn around and buy treasuries with some of these facilities in a way to prop up our unfettered spending in this country, where we're spending $1 and borrowing 50 cents for every dollar we spend? I mean, the American people are extremely, I don't know if y'all are listening over there or not, but the American people are extremely concerned about the activities that are going on in government, and it also they lump you, whether you want to be independent or not, you're lumped in as part of government. And so I think y'all are going to have to do a better job of articulating, because when you look at for example, when some of these financial institutions started participating in some of these credit facilities, it actually brought confidence to the market. And so the fact that a large bank is now coming to the Federal Reserve window and you're completing that transaction should give the market more confidence that that financial institution possibly is in good condition, or or if you were turning away, it might have a greater impact. But I'm having a hard time understanding the transparency argument.
Congressman, if I could respond briefly to several of those points. First of all, on the foreign currency swaps, we provide very detailed information about those swaps on our balance sheet and in the monthly report that Congressman Watt referenced. For example, we list the countries that we have the swaps with. We list the amount outstanding. We list the terms and conditions of those swaps, so that the public will understand that what the exposure is of the Federal Reserve. That's all explained in our monthly reports. As the amount drawn in those swaps changes, we revise that information to make it available to the public. So that kind of information is precisely what we've tried to put together on the website. Also, you referenced the size of our balance sheet, $2 trillion. Most of that is in the form of U.S. government ownership of U.S. government securities and agency guaranteed securities. That again is listed in detail on our balance sheet with the maturities of those securities and a lot of other detailed information that should help give people confidence if they are able to spend the time to look through the information. We have a complicated balance sheet. It can't be summed up in a couple of words, which makes it more difficult for us. But that's why we put so much information on the website and in the monthly report.
Gentleman's time has expired. The gentleman from Kansas, Mr. Moore, is recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Alvarez, as we consider improving transparency and oversight of the Fed, I'd like to better understand what risk U.S. taxpayers take on when the Federal Reserve lends money, especially under the authority granted the Fed via its 13.3 emergency powers. What collateral, if any, does the Fed require to protect against the risk of losses when extending credit? And has the Federal Reserve lost money on its lending activity? Do you expect the Federal Reserve to lose money on any of its lending activity since the financial crisis last year, Mr. Alvarez?
So, Congressman, as you pointed out, the lending that we do under Section 13.3 is secured. So we have collateral against that lending, and we believe, and our advisors who are monitoring these things and valuing the collateral on a regular basis continue to believe that we have very little exposure here, and we expect to be fully repaid on the loans that we've made. The types of collateral that are supporting those lendings is described in the monthly report that we have. It varies by facility. Some facilities are backed by residential mortgage-backed securities. Some are backed by other kinds of loans, agency securities, a variety of things. But we explain that in the monthly report for each of the facilities.
Thank you, sir. And as we consider improving transparency of the Federal Reserve, I understand more than 385 prominent economists have signed a petition warning, quote, the independence of U.S. monetary policy is at risk, end quote, because of efforts to audit the Federal Reserve's monetary policy activity. How would you respond to those economists?
So we believe that monetary policy must be done in an independent manner, and believe that it's most effective when the Federal Reserve is able to have its unfettered debate and issue its policy decisions without second guessing, without competing interests in communicating those policies to the public. So in general, we agree.
And finally, Mr. Alvarez, if H.R. 1207 was signed into law by the President today, what effect might that have on the economy and financial stability, sir?
So if the bill were passed today, the GAO would be required to do an audit immediately of our monetary policy operations. We're concerned that that would, as I mentioned in the testimony, cause the markets and the public to lose confidence in the independence of the judgments of the Federal Reserve. There would be confusion about the communication, about the forward actions of monetary policy, the forward path of monetary policy, and we're concerned that would make our ability to implement policy that would reach maximum employment and price stability much more difficult, leading potentially to higher interest rates before that's appropriate, and in fact higher interest rates as a general matter.
Thank you, sir. Mr. Chairman, I yield back.
Thank the gentleman. Mr. Castle from Delaware is recognized for 5 minutes.
Thank you, Mr. Watt, Mr. Chairman. Just in reference to something you said earlier about a number of the, I and a couple of others over here mentioned information that we wanted, and you indicated some of the information from the Federal Reserve is on their website, which may be accurate, but maybe I didn't articulate it very well. We're really trying to derive independent analysis of what their information is what we are after. But to Mr. Alvarez, you mentioned a couple things, and I tried to find it in your written testimony, and I couldn't, so I don't have it exactly, so I may be not summarizing quite correctly. Correct me if that's the case. But you indicated something to the effect of you, the Federal Reserve, are looking at additional information that you could consider releasing without jeopardizing your programs. Those are my words. And then later on, you indicated in your testimony you're exploring ways to continue transparency or something of that effect. That, I assume, is beyond anything that's been done so far. Without going into any of the confidentialities of the Federal Reserve, can you share with us more specifically what those discussions consist of or what areas you are looking at this time?
So we have, as you've mentioned, increased substantially the amount of information that we make available as we've learned that there's an appetite for that information. And we continue to take suggestions that come from hearings like this and from congressmen to think of ways that we can be more responsive.
Is there anything specific you can share with us that you are considering at this time beyond what you've already done?
So the chairman has mentioned that we are actively considering how much information about borrowers we can make available. And then we're exploring ways to allow review of the operational integrity of our implementation of monetary policy and whether that's possible. All areas that are still under thought, deep thought.
Okay. You've heard the concerns of the various members on both sides with respect to everything that the Federal Reserve is doing. Not that you don't do a good job, but the disclosure of information, et cetera. And we're concerned because ultimately any losses that are founded are going to be paid for by the taxpayers. And there seems to be some opposition to Dr. Paul's legislation, as I understand it. So my question is, how much congressional oversight of the institution is appropriate, or what aspects of Dr. Paul's legislation could the Federal Reserve live with, if you're qualified to give us that response in terms of your knowledge?